Hello and welcome to another video for myatmm.com. It's time to look for some transactions to track or some new positions to get into. So let's get right to it. Here we are today logged into Thinkorswim's trading platform. We're wanting to review the transactions that we placed last week on stock ticker symbol BITO it's the Bitcoin ETF. We're filtering down by the wrong symbol. Let's filter down by BITO right now so we can see the past orders. So there we go. Okay, so last Sunday, that's April 15th. Let's verify that. Okay, no, that was when the trades happened. Okay, so the 14th. So last Sunday, we placed these two orders on the 14th, and one of them I had to cancel and do the limit order that I had placed. So let's focus on the one that got filled. So we placed the cash secured put right here, expiration of last Friday, the strike price of 29 for a limit of 89 cents per share, and that got filled. So we placed that on Sunday, and you can see right here, let's see, yeah, this is the put one. So the next morning, 1 minute after market open, the cash secured put executed, and we had placed it for 89-cent limit order, but we actually got $1.05 for it, so that's nice. And then the covered call that we were selling, this 32 call right here, we had placed it for 62 cents. I had to cancel that one and put in another limit order. I've set it at 28 cents. That one didn't fill, so I canceled it and replaced it with 27 cents, and that one did fill, as you can see right here. So that was at 1400, so that's like 2 o'clock in the afternoon, Central Time. So yeah, I think what happened is the stock price, let's see, went up or down obviously, but far enough away from the price to where we couldn't get the 62 cents. So yeah, what it did is it went down on market open. It went down, which is why the 29 got filled for higher than we had asked for, and the call didn't fill because the value of the call went down on market open, so it couldn't fill at 62 cents. So we had to adjust it later in the day to get that fill. All right, but it's the same expiration we are going for, April 26th. All right, and you can see up here where those transactions took place, where we got the $105 and the $54 for that, because that was on, we did only get 27 cents, but that was for 2 contracts. So what we need to do now is need to go over to the web application to track those transactions. So let's do that right now. So here we are logged into the web application, myatmm.com. First thing it shows is the dashboard once we get logged in, and we need to come over to the cost basis screen, and we need to select BITO. That's the only stock ticker we're working with, so that works. That's the one that's selected by default. And we own 200 shares. We need to come in and put in our put and call that we sold, the covered call and the cash secured put from last Friday. Last Sunday, yes. Okay, so we need to go ahead and put 2 positions on the board, and we need to go ahead and get Thinkorswim visible on the screen too so we can reference it. So there that goes. All right, the start date for these, we can look in Thinkorswim. The start date was the 15th of April, so we can change this to April 15th for both of these. Both of them are sell to opens. One of them is a call, one of them is a put. The covered call contracts, we did 2 of those, and we did 1 cash secured put. The expiration on the cash secured put was April 19th. So this one right here, April 19th, and the expiration on the covered call was April 26th. So that's this coming Friday, not last Friday. Okay. The strike for the covered call was 32. And the price we got was 27 cents. And the cash secured put strike was 29. And the price was 105 that we got. All right, so we're going to go ahead and save the covered call first. And as soon as I click save here, it will move down into the call section. So save that, and it went into the call section. And then when I save this cash secured put, it'll move down into put sections. I'm going to go ahead and collapse this stock so we got some more on the screen that we can see. All right, so click save here, and it moved it down into the puts. All right. We need to make sure that these transactions get logged to the permanent transaction history. So first thing, let's look. So this cash secured put record is right here, the $1.05, referencing back to Thinkorswim. So it's $1.05, 65-cent commission, which we can verify there, and it's a two cents. So again, I pressed the up arrow to move it to 2 cents, and we could have used these buttons here as well to do the same thing. So we need to click this helper that'll move it down, do the calculation for us, the math for us automatically. Click save here, that'll move it down into the permanent transaction history right there. And we need to do the same thing with the covered call that we sold. So that's right here. And it was 2 contracts, so it's $1.30, still 2 cents for the fees. Move that down to here, does the math for us and totals up the total amount. Click save, and that'll move it down into the permanent transaction history as well. All right. So scrolling back up, we've collected a total of $525, but we're not done yet because one of these did get assigned because we obviously have gone past the expiration of last Friday. And let's see, so right here in Thinkorswim, you can see BITO was assigned, and basically this cash secure put right here. So it expired this past Friday. The strike was 29, and as you can see, the last trading price is 28, so it was just below it. So we did execute that one, and we were assigned on that, so we needed to buy 100 shares of BITO at the strike price of 29, so it cost us $2,900 to buy those stocks. Something I want to note before I do this is right now you can see the cost basis is $31.75. So as soon as I do this, so we're going to say it was assigned, and the assignment date, we're going to go by Thinkorswim's assignment date. It's on April 20th, so we'll change that to April 20th. And it's a buy to open. We're buying stock. We're buying 100 shares. The assignment price is the strike price, 29. So that's $2,900. Now, as soon as I click submit here, we're going to have 3 stock transactions instead of the 2. So I'm going to go ahead and expand this and open that up so you can see it added. So as soon as I click submit, you'll see a record get added there in the stocks, which it did. And now this cash secured put position is no longer relevant. It's expired and it got assigned, and we've already recorded that. So go ahead and delete that. The covered call is still valid because it doesn't expire till this Friday. We're going to go ahead and collapse this to clean it up and get some more room on the screen. And what we also need to do is we need to make sure that this stock position right here has a permanent transaction added to the transaction history. We don't see the proposed record. It didn't produce by adding this record. So if we just click save, it'll generate that record for us, the proposed record. All right. And you can look back in Thinkorswim. There's no commissions, no fees. So 0 and 0 is okay there. Click the helper button. It moves that transaction down, and you'll notice this toggle gets set to true because it's a stock purchase. So we're going to go and click save, and then that records the stock purchase to the permanent transaction history. Okay, so now let's come back up to the top and review. And if you remember correctly, I told you that the cost basis was $31.75, but now that we have added 100 more shares purchased at $29 a share, it has pulled our cost basis down to $30.83. That's that dollar cost averaging at work there. So we've purchased 100 shares at $32, $31.50, and $29. So the average of all those shares that we've purchased is $30.83. That's our cost basis. And if we include the premiums that we've collected to this point, we are setting at $29.08 as our overall cost basis for this position. Okay, so we've logged our transactions. We've cleared out the ones that have expired. This covered call is still relevant till the 26th. And interesting thing to note, what we could actually do, now that we own 300 shares, we could look to just add one more contract onto this at the same expiration, the same strike price. We actually don't need to do the same strike price because our cost basis is now $30.83. So we could move that down to 31. So really what you could do is either buy this back, or you could roll this to the 31 strike, same expiration, probably collect a little bit more credit while you're doing it, and then also add on another contract at the same time. So we'd have a total of 3 contracts because we own 300 shares. So there's a few different things we could do with this. I'm trying to assess which one to do for right now. To keep things a little simpler, I think what I'm going to do is I'll probably just keep this contract in play. Actually, we'll wait till we see it in Thinkorswim. I want to see how much extrinsic value is still left in the stock. But we do want to go ahead, so let's go and collapse this real quick. We do want to go ahead and look for another cash secured put that we can play, because we'll be able to play it looks like about $28. So we always want to play both sides. So let's jump over to Thinkorswim and see what we can do here. All right, so here we are back on Thinkorswim's trading platform. We need to go ahead and pull up the cost basis. So there it is on the screen. That's our current cost basis and the cost basis with premium. Okay, so let's go over to our activity and positions. We can expand BITO and see that there's that covered call in play. And what I told you I wanted to look for is I wanted to look to see how much extrinsic value is still left in this this option contract. So there's 0.14, so or 14 cents per share is how much time value is left in this contract. All right. So I think what I want to do, let's first jump over. So, okay, our cost basis is $30.83. So that means we can actually sell covered calls at $31 for the strike price and still be profiting and still breaking, we're basically still keeping all of our premium at that point. So this could roll to 31. So that's what I'm going to do. I'm going to go ahead and just left click on this and show you guys how to do this. You can right click right here, say create a rolling order, and then left click that and it'll bring it up for us. And rolling by default will push it out a week. So you'll notice it's going from an April 26th expiration and going out 1 week to May 3rd. But the thing is, and we can actually do that for a 16-cent credit per share, so $16 per contract, and we have two, so it'd be like $32. But our cost basis is now $30.83. So while we're rolling out 1 week to May 3rd, we can also lower the strike price down to 31. So you'll notice it's going from 16, and let's see what it jumps to. So there you go, lowering it down to 31. We also are increasing the premium, so we're moving it out 1 week. Now, if we didn't want to move it out 1 week, say we just wanted to roll the strike price down but keep the same expiration, we could click this drop down and change it back to April 26th. So now you have the same expiration, just rolling it down $1 in strike price, but you can see we're only getting an 8-cent credit to do that. So I'm going to go ahead and stick with the original May 3rd. So we're pushing it out 1 week, we're rolling it down $1 strike value, and we're going to be able to get 26 cents, it looks like, for that. So what I'm going to do is I'm going to go ahead and submit this and queue up this order, and then I'm also going to turn around and look to sell one more covered call contract with the same parameters, May 3rd, 31 strike, and see what we get for that too. That way we'll have a total of 3 contracts at the May 3rd expiration with the 31 strike. So we'll left click on confirm, just to see that play out. It looks like we'll get about a $50 credit when this executes. We'll go ahead and click send. So that order is now queued, and something to notice, we're sitting on the wrong stock ticker, so it didn't show up when we did that. So switching over to BITO, you can see that is now queued up here, setting at the 31 strike. And that's only for 2. If you were to left click this, you can see that's only for 2 contracts. It's like buying back the 2 that we currently have and then rolling to this 1 week out in a lower strike. So you can see that happening right there. But we have a total of 300 shares, remember, back to the web application. We have 300 shares, so we can sell one more covered call contract at that 31. And we wanted to do the same expiration of May 3rd. So you can see 31 strikes for April 26th is selling for 21 cents per share. And to match this same contract that we just queued the order for May 3rd, that one is selling for 34 cents. So we're going to go ahead and stick with that just so all of our contracts are on the same expiration, just to keep things a little bit easier to understand. And it looks like there's a big spread here, 34 to 47. So the mark, okay, I'm not showing the mark here. Let me go ahead and add the mark because it just makes the math a little bit easier. So we'll click customize right here. We'll type in mark. And all mark is it's the middle. Basically, between the bid and ask, it's the midpoint. That's what the mark is. So we'll click OK, and that adds the mark. So on this one, you can see the mark. So the bid's 34, the mark is 40, so the middle point is 40 cents. So if we left click on this one right here, it'll bring up the order. And let me just scroll down so I can see that. So yeah, 40. So the 31 strike, May 3rd, it's only one contract, which is correct. And we want to bump this up to the mark because you should be able to get, usually you get the mark price, generally speaking. So we want to just try and get as much, money as we can for this. So that's all set. We can go ahead and click confirm and send, and we'll get about another $40 credit for that. And we're verifying just that one contract, May 3rd, 31 call. So that's correct. Click send. All right, so now both those orders are queued. And again, if we click on this, you'll be able to see that. You see the rolling one right here. That's these bottom two rows. And then you'll see the one contract that we're selling right there for the 31. All right, so that's the covered call side. Now we need to look for a cash secured put. So to make this screen a little easier, I'm going to go ahead and click this. I think I'll have to click this twice. Yeah, the first time expands everything, and then clicking again collapse all of them just to clean it up so we can look at it more easily. All right, we're going to expand this first one just to 5 outs expiration. Also want to change this strikes to just 4 so we can, because for cash secured puts, we're looking for at the money strikes. So there's no reason to look at all those strikes on the same screen. We can just collapse it down to 4 of them. So 2 calls and 2 puts basically is what it's showing. All right, so this coming Friday, the current trade price is 28.10. So that's interesting, 28.10, and it's showing this is in the money. What we also want to focus on is extrinsic value. So you can see that the 28 has the most extrinsic value, and then that one has it. But we always do lower. It's kind of funny that it's showing that 28 is in the money because the last trading price is 28.10. So 28 shouldn't be in the money like it's showing, which is interesting. It's probably just like an after hours thing. Probably the after hours value is probably different. All right, let's just expand the next 3 weeks out because I want to compare the strike and the premiums. So 27.50 is 75 cents. Look at that, 27.50 is doubling to $1.51, and then that. And I think we ran at that same issue before. How it seemed like the second week out was always doubling the premium. But for simplicity and to demonstrate the application and how we're tracking transactions, I'm going to go ahead and continue to stick with this one weekly here. So we're going to do the April 26th, which is just 5 days out for this Friday's expiration, a cash secured put running at 27.50. And so we'll left click this one. And it'll bring it down here. And we can also reference the new mark column, 77 cents, so we can bump this up to 77 cents. We just want to do one contract, and then we'll click confirm and send, and this will be the one cash secured put contract, so we're playing both sides. All right, and there we are. So we have both orders queued, and to see all of those orders all together, you can probably come back to this screen. Yes, the working orders on activity and positions, you can see all 3 of the orders. So here is the cash secured put. The first one is a cash secured put. Then you have the covered call for that single contract. And then the bottom 2 is rolling the current covered call transactions that we have on the 2 contracts, rolling it 1 week out and rolling it down $1 in strike because our cost basis has come down to a point where we can do that with breaking even and keeping all of our premiums still. All right, so this coming week should be interesting to see how all of these transactions play out, and we will review that next week. One thing before in this video, wanted to go back and also match up the account statement and show you the balances matched to make sure we entered the transactions correctly. So let's go do that right now. All right, so here we are back on the web application. We want to get Thinkorswim up on the board for the account statement. So we can see the account statement ended at 92,325 cents. So we want to go to the dashboard on the web application and check the brokerage number, and they match $92,300.25. So we know we entered the transactions correctly, and so we've reconciled the account, so it's balancing. So yeah. Oh, one other thing is we want to go to the premiums tab. We have collected so far for the month of April $525 in premium. So that's good to know. All right, we'll wait till next week, review all these transactions, see how it plays out. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.